Your business is in sync with LiveSync. This webinar is powered by LiveSync Accounting and Xero Accounting Software. Introducing Attorney Dexter Distajo.
The bank accounts in Xero is very, very simple. And I think if I compare this with all other software, Xero actually provides a very user-friendly type of bank module. So in the bank module, basically we discuss the access and account setup of these bank types. We'll touch with bank feeds. What are the banks in UAE where it can be integrated with Xero as bank feeds. We'll walk through with the dashboard of the bank account. We'll cover some bank account entry options, which is spend money, receive money, and transfer money, and sample entries of the methods. There are methods of entry: direct method, the prepayment and overpayment method. Let's look at the reports, discuss a little bit about limitation and application. Okay, so let's go to Xero now. So let's go back to our Xero organization. So this is the same Xero organization that we've been using since our first day of the webinar. So as we go along every week, we are actually accumulating data here so that by the end of this webinar, we can actually generate management report for you. So now the bank accounts can be located under accounting menu on the top of this as a sub-menu as bank accounts. Okay. So the people who can access bank accounts are only standard users and advisor. Other users cannot access this unless you are a read-only also user. You can access, but you cannot edit or do anything. So this is a typical dashboard of your bank accounts. The bank accounts dashboard actually shows you all the bank accounts that you have set up. Now, when do we use bank account setup? I discussed this at the beginning. When we are setting up a chart of account, and if we are setting up a bank account in our chart of account, and then also setting up our cash funds account, let's go to that chart of account. We use a bank type, okay? We use an add bank account to set up the chart of account for cash and bank accounts, where you input it here. So when you are trying to input a UAE bank, so if you have any of this bank, Abu Dhabi Islamic Bank, Emirates Islamic Bank, Emirates ENBD, HSBC, Mashreq, and RAK Bank, you can actually link this bank to your Xero. So what it does is it will actually provide now the data of the previous day as a bank statement in your Xero. If you're setting up a bank account, for example, this is how you do it. You just put the name of your bank, put a code, and then you can put the account number, and then make sure to select the currency, okay? The right currency for this bank account. And then you hit continue, then this would bring you now to a creation of your bank account. So here in our demo today, you would notice that I have a bank account for RAK Bank, which is a bank account actually, and then a petty cash, a cash account, but I have treated and created this as a bank account. Now, many of the accountants would sometimes set up petty cash as just an ordinary account, as a current asset. That's fine. But for us, we would prefer any cash account will be set up as a bank type. So I can actually move this bank account on the top. You know, you can just scroll down, change the order by clicking the arrows below. And then if you want to show this in your dashboard, you have to tick this here. Now, for each bank type that you have created, each bank account will have this following sub features. Okay, so for each bank type, you will have accounts transaction, bank statements, and then this is your entries that you can do In the bank accounts, you can create spend money, you can create receive money, you can do transfer, then you can do reconciliation procedure, and then you can also connect your bank manually through this manage account option. The same thing is here. Normally, if your bank can be possibly, connected as a bank feed, Xero would suggest to you saying that this particular bank account actually has a bank feed, and then you can just activate it. No. So when I click this, for example, and I want to activate and connect my bank feed, I just click that, enter my login, and then click next, and then it will be verified. Once I cannot go through, the steps of this because I don't have actually the bank account with me. But this is how it would look like. You input your usual online banking ID, user ID, and then use password. You take the terms and agreements and condition, and then you follow the 2 steps here. When you click next, meaning it will authenticate your login details, and then it will ask you which particular account you have in Rockbank. If this is connected to AED, then you will have to link that to AED, or if that's USD, you connect, and then you complete that. It's a 3 easy step in integrating the bank feeds. Now, going back to the dashboard, for each bank type, actually, so before going to that, so here in the dashboard, you can actually create the bank account from here. The same way you're doing a chart of account earlier. There's another way of adding a bank type. You can also create transfer money. You can create bank rules, and then an uncoded statement lines, which we can actually do this on similar functions that it is already showing in your managed account. It's just a shortcut buttons. Now, if you'd want to go to the specific bank type dashboard, you just click the specific bank type code, and each of this bank type would have this particular dashboard. Okay, so what you see in this dashboard is your statement balance, the balance in Xero. So what is a statement balance? Basically, this is the bank statement that is already uploaded in your Xero, and this is your book balance. Now, if these are not the same, then basically you are not reconciled. So if you try to visit this very quickly, and I'll do a reconciliation report, your Xero would actually tells you, I'll show you a bank reconciliation that in balance of Xero, which is your book entry, and then this is outstanding, meaning outstanding checks or payments, the book entries that are not reconciled, and then the outstanding deposits or deposit in transits that are not reconciled, and then this is your bank statement. So these are your reconciling items. So when we do the bank reconciliation, we'll discuss more about how to fix the reconciliation. From here, you can switch different banks. Okay, so I can switch this from Petty Cash. So Petty Cash, also a bank type, would have its own dashboard as well. I can switch here from then to my bank account. Okay, now each bank account would have a reconciliations tab. This would be filled up later once we import or have a bank feeds the items that needs to be reconciled every day or regularly. Cash coding are the bank statement lines where you can do a shortcut or cash coding procedure. I will discuss this, why is this important, and how it will make our life easier as an accountant when we do cash coding. Then the bank statements tab. The bank statements is all the bank statement either manually imported or through bank feeds will fill up this button, this particular tab here, this dashboard. Now, for now, there's nothing because we don't have a bank feed and we did not import. We will show this once we try to do an import in the bank reconciliation. And then finally, the accounts transaction is basically your bank ledger. It will tell you what are the entries that you have done already in your Xero, in your books or your ledger, and it will tell us what are the status of this. So all these items are reconciled. So your objective towards the end of the period that all these lines must be reconciled. Okay, now let's do the same thing with Petty Cash. You have that as well. You have reconcile, cash coding, bank account, and accounts transaction. So far, these are the only one that is recorded in our ledger. Accounts transaction would mean your book entries. Bank statement are your bank statement entries, with whether it's through bank feeds or a manual import. So now the first thing we wanted to do is to get familiarized and learn on how to use these 3 very important bank account entry methods. So one is spend money, receive money, and transfer money. The receive money is basically, it's like a cash expense where you can directly record the expense without going through a bill or a supplier invoice, because that's another way of recording the expense. You go to the bill, you create the bill as an accounts payable, and then pay that with the bank. Another way would be just doing a spend money where you just directly record the expenses without going through with the accounts payable. So this is technically a cash expense entry. And you would notice that this is, I'm using the petty cash because mostly if you're managing a petty cash, you are going to do mostly of your transaction as a spend money, unless of course you do the bill method as I mentioned earlier. So there are so many ways to, there are 3 ways to create a spend money. No? You have a direct method, the prepayment, and overpayment. Let me discuss this one by one. The direct payment would mean that when I created this direct payment entry and the account that I'm using, immediately the account that is being used here, let's say office supplies, office expense, the entry here will be showing us the debit entry of your of this journal. This is your debit entry, and your credit entry is the petty cash, the account that you are using here. There's another way of doing this as well. You can go to the plus shortcut sign, you will click spend money, and then from the spend money, you are going to select first which bank type of account you want to record this spend money. So you can do bank account or petty cash. Whatever you select in your spend money, this would be the credit entry in your journal or ledger. So for example, we were doing the petty cash, and I wanted to record Jane Doe, okay, recorded and purchased in June 2. Let's say this is petty cash fund, voucher number 123456, okay? And then he's buying printer ink. And then I would buy, let's say, 5 sets of this, and then I'm buying, let's say, I'm buying this at 150 per set. So I would use office expenses. I use VAT expense because I would assume I would receive a bill that of a registered supplier. And then I say I would want that this is an expense of branch 1 and department 1. I can attach that by scanning the bill that I received from Jane Doe. So what do? I just click here, save. So what would happen when I click save? That particular bill is already recorded and added in your book as debit to office expense and credit to your petty cash. So what we did was just a direct payment method. Now let's do another spend money, this time using the prepayment. So this time I would choose that I would be paying from Rock Bank. Okay. Normally when you're using bank type, you're paying this normally with the bill, but sometimes it would happen that you would have transaction that you just record directly from Xero as a spend money. So an example would be is prepayments and overpayments. Prepayments are transactions, actually prepayments and overpayment, what it does is when you're making advances, for example, to your supplier, and you would want to create a credit. Okay, so an example here, let's say LiveSync Accounting, this particular firm engaged LiveSync Accounting to do their bookkeeping for them. So I would select prepayment. After signing the contract, LiveSync Accounting asked them to pay an advance of 1,500. What I would do is I would select prepayment because this is an advance. And I will date this as June 5. Okay, and then I would say payment voucher 3556. Then I can attach that here and I would say advance accounting support. And then and then this is 1,500. Now, if I'm doing a current asset method here of advance, meaning if I want to select my own particular account where I would place, where I would debit this in my balance sheet, I can select here an advance account as an asset account for you. So let's say I would record this as advances to supplier. Okay, Now, when you are doing this, technically, this is your debit entry because you're doing a spend money, and then your debit entry would be the bank. But what it does, if you notice, the color of this entry becomes pink. Okay, why? Because it allows us to alarm us that this is actually, we're creating a credit entry that needs to be allocated should the invoice be created eventually for this particular advance. So now your option would be, if you follow the VAT in UAE, which is the tax point would be when you're receiving the money, normally you would select a VAT of 5% already. But for me, for this demo, what I would do, I would record no VAT. LiveSync would actually issue them an invoice before the end of June, therefore in the same period, and I would record the VAT from that invoice when it will be created, when we receive that from LiveSync. So then I select also the branch here. So notice what I would do. So here, take note, when I'm using prepayment, the user has the option to select what particular account that you would want to debit this particular transaction. Okay, because later you would know in the overpayment, you don't have that option, because in the overpayment, they will use the accounts receivable clearing account as the account that is going to be debited. So let me save this so that you'd see this properly. So now I've recorded a payment to LiveSync Accounting, this amount. Okay, if I can click that one, this is my payment entry. It's still not reconciled. So we paid 1,500 to them. Now on June 10, LiveSync issued a bill for 3,000 for the services for that month. So once I receive the bill, I would record the bill now. Okay, LiveSync sent me the bill already 7 days after. Okay, that is June 10. Okay, and then I would say this is invoice 2020 2156. I can attach the invoice here if I'd want, and then I would say invoice June accounting report, and then actually LiveSync billed me 3,000 per month. So then that my account here would be accounting. So I'm creating a bill now because LiveSync is a VAT registered. So then I do VAT expense 5%, and then I charge this to branch 1, and then I charge this to department 2. I click this save. Look at what would happen here. So here, once I created that bill, Xero would automatically notify us that there is a pending outstanding credit of 1,500. Xero would ask us, do you want to allocate the credit? You would say, you allocate, or you just say skip. Because if you notice here, Xero has already tagged us with that there is a credit of 1,500 that we can allocate at any time. Why is this the case? It is because if you notice, when we record the prepayment, we use the LiveSync Accounting contact, and then when we are making the bill, we are using the same contact. So the key here, so that the credit would align to the bill or would trigger the allocation to the bill, make sure that the advance contact that you used and the bill contact that you used are the same. If you're using even in wrong spelling, this would not trigger a connection of the credit. So it is important that the contact must be the same of the advance and of the bill. So what I would do is I would allocate this. Okay, then I would say I would allocate 1,500 of my credit. Okay, so the balance of this bill, so all that credit will be 0 now, but the balance of the bill will reduce. So when I allocate this, automatically Xero now would allocate the prepayment here, and then this is your balance. So this is how you use the prepayment method when you're doing spend money. Now let's do another example. Okay, let's do another example for spend money. At this time, we're using the overpayment method. So I'll use Rockbank again. This time, this LiveSync Marketing UAE have engaged bright movers. Okay, bright movers to move some furnitures office equipment to the office because this is a new office. So this was in June 10, and then they would say payment voucher number 365, whatever is that number, and then you would say advance for moving services. Okay, so here you're actually disbursing from the bank an amount of, you issued maybe a transfer here or a check. So what I would do, this particular LiveSync marketing company have done a advance of 1,000, but what we will do is what we will use now, the overpayment method. Sorry, I would be copying this because it will be deleted. I will click overpayment method. Okay, so notice here that I cannot change the account. Okay, and I cannot change also the tax rate, but you can actually do department. Now, if you ask me which do I prefer, the prepayment and overpayment when I'm recording the advance, we will always recommend using the overpayment. Why? This is the reason. Because once I save this, your accounts, your aging payable would actually capture this. So when I go to your age payable report, Xero would actually capture this because it triggers a accounts payable system account. So if you look at here, where is that bright mover? See, you would see that negative accounts payable here. Now, in the prepayment method, it will not show up. Why? Because it did not use the accounts payable account. It will only be created like an ordinary entry, and it will be posted in the current asset account of advanced supplier. But here, the account that is being used here is the system account of accounts payable. So that's why we would prefer doing overpayment when recording the advance, because one, it is not really, there's no difference really on the prepayment as to credit allocation. Number two, we would want to see when we're running an age payable, because we're looking at this every day. Your owners, your managers would be looking at this. What are the payables that needs to be paid? You would immediately see that the credit is actually outstanding in your age payable. Okay. So let's go back. So what happened there is that you have recorded already that particular 1,000. Okay, where is that? Bright movers 1,000. You have recorded that. Now, on June 21, Bright Movers sent us a final bill. The bill is actually 2,000 dirhams. So I will create the bill. I received the bill. Now take note, I have to use the same contact so that the credit can be linked to this particular bill when I'm allocating the credit. So let's say the invoice I received was 65489, and then I can attach and scan that bill, and then I would say final invoice for moving services, and then I would do 2,000, right? And then what do I use here? This is the time now I would record a specific asset, if it is asset account or expense account. So here I would do what type of expense I would use here. So I think I would use general expense, okay, as an example of account that I can use. And then I select, because this is a VAT registered, then I use a VAT registered VAT expense 5% rate, and then I'll charge it again to department one and then branch one respectively. So here, when I approve this, the system would again notify us what's going on, that there is actually a credit. Okay. Now, earlier I do an allocate, but I'll show you how you can allocate in another method. So I'll skip this. So what I would do, I click this credit here, and then I put 1,000. That's one way, right? Another way of doing an allocation would be so you would notice in your purchase dashboard, you would see the credit outstanding that is still showing up in our system, which is the 1,000. Where is that 1,000? So Bright Mover has a 1,000. I can click here, and then from here, I can actually allocate also. So either way, you can do that, because technically it will be showing you a overpayment invoice here. Then you can allocate the same way. So there are three methods of doing this. when you are allocating credit of advances. One is when it pop up after you save or approve the bill. Number two, when you're just clicking that credit, highlight blue text below your bill in Xero. And number three, you actually go to that particular overpayment bill that you have created and then allocate, which is the one that I'm doing here. So I'll allocate this now. So what would happen is that your age payable now is reduced. Okay, the age payable now, when we're looking age payable now, that particular credit has been allocated. Right, so it's nothing. So what is now showing is only the balance in the statement. Now, I can actually quickly go back to the supplier contact and look at what it was, how it was actually being presented in the ledger of the supplier. So I'll click Bright Mover. Okay, it shows you the history, what you have done here, but there's also a particular report that you can download. This is basically your statement of account for the supplier, where there was an initial advance, but that advance is credited. That's why it's zero now. And then that advance is credited to this particular beer, and therefore your balance for the supplier is 1,100. Okay. Now the next part would be doing a entry for receive money. Okay. So receive money in Xero is basically you are receiving money from your customer, from your investors, or what else? Advance payment from your customers. This is where you use the receive money in the bank account. So let's say, again, like spend money, you will have also 3 different ways of recording this. So we have what we call direct payment, prepayment, and overpayment, and it works the same, except that this is the customer-facing side of the transaction. So in our example, let's say Dexter Distao, who is the owner of this business, LiveSync Marketing UAE, he decided to put cash of, sorry, let me just do, I'm doing this wrong. What I would do is not in the bank. I'm putting cash on the PT cash, no? So I've drawn around 600 dirhams from my pocket, and then I talked to the custodian, PT cash custodian, I said, please add this to the PT cash in your fund. So the accountant will have to record this as receive money from the owner. So what I would do, I do receive money, and then because the fund that receives that cash is the PT cash, then I'll do receive money from the PT cash account. Then I'll put here Dexter, and then Dexter actually put this money sometime on 16, and then I would say receipt voucher 3659, and then I would say receive cash from owner, right? Because in small businesses, this happens a lot. You need to know how to record the money that's coming from the pockets of the owners or directors, and the payments that you're making towards the directors as well, which you are doing the spend money, the reversed one. So here, let's say the owner has put cash of 600 dirhams, and then I would record this to fund introduced, owner's fund introduced, which is a liability account in the balance sheet. Obviously, there is no tax for this, but I was charged this for branch 1 and department 1. So here I'm doing a direct payment where I can select what particular credit entry that I would account, and my debit entry, because I'm receiving it, would be the PT cash. So the entry would be debit PT cash 600, and then credit owner's fund introduced 600. Okay. Now I would save that now, and then your PT cash now would have an additional 600, and this 600 was coming from the purse or the pocket of the owner. We'll do a PT cash replenishment sample later. Okay, so that's one way. Now let's do another receive money from a customer. This time I'll do a bank account, which is Rock Bank, and then I'll do receive money. So in this receive money I'm going to show you, I would do again a prepayment method. So here in the prepayment method, like in the spend money, you can actually select the account. So here in this case, there's one particular customer who engaged LiveSync Marketing for a one-time marketing strategy. Okay, so we received this in our bank in June 15. And then I would say this, normally I would create this as a debit note 2356 to distinguish this from my invoices. And then I can select which brand I'm using. So I'll do brand. And then you would say June, maybe June 2020 contract. Okay, and then I would say one-time marketing strategy advance, right? Yeah, and then I would receive an advance in the amount of 12,000. Okay, and the contract of this is actually 25,000, but they made an advance of 12,000 based on contract. And then what I would do is, I don't know if I have advance to customer. I don't have advances to customer. No, I don't have. So what I would do is I would create another account called advances to customer. So here I would do current liability, and then I would say this is 654. I hope that is available. Yep, it's available, and there's advances from customer. Yeah, because you're receiving this advance. Then I would do enable this just for my, and then this is default as no VAT for me. So then I record this on this with no VAT, and then charge this also from batch 1 and department 1. Okay, so this is Mandy Restaurant. They've engaged us for a 25,000 contract, made an advance of 12,000, but I'm using a prepayment method of receive money. Then at the sometime on June 25, this LiveSync Marketing issues an invoice to Mandy Restaurant for the full contract amount. So here I'm very careful again of using the same contact that is already in my system. And I would say I invoice this on 25, and this is my invoice number. And then I would say full contract for one-time marketing strategy. And the value of this is actually a big amount. It's 25,000. And then this is where I book sales, and then with VAT. Dubai, because I'm doing VAT Dubai, and then because the client is in Dubai, department 1, and then I approve. So again, the same thing what we experience is spend money, the same thing also in our receive money. Then again, it ask you to allocate. Obviously, we can allocate that, but I don't want to do that from there. I would use it here. So allocate 12,000. But before I will do that, let me just show you how it would look like in our age receivable. Whether that entry actually will show up, because I have not allocated yet, right? So you see here, Mandy still showing the full invoice amount, but I don't see the negative 12,000. Why? Because we are using a prepayment method of entry compared to when we're doing overpayment method. So what I would do now, very quickly, allocate the 12,000, okay? And then I will do that here. So now it's been reduced. Monday will be reduced in this amount. Now let's do another method, would be, again, receive money. We're showing you the overpayment method. This time there's another restaurant who engage us for a bigger amount for 85,000 one-time strategy. So the name of the company would be 8 Fresh Restaurant. Okay, we received this advance on June 16. Okay, so receipt voucher 36549. Then I would say advance for full year marketing support. Okay, or I can just do it here. I would say I don't have that item here. If it's available, you can auto feed that one. So maybe I would say monthly for 1 year, and then I would say that this amount is actually 85,000 contract, and then I use this type of rate, which is now this time this is based in Abu Dhabi, and then I would do branch 1 and then department 1. So I would say branch 2 maybe, because this is in Abu Dhabi, for example. Okay, so sorry, my mistake here. This is actually what I'm doing. I'm doing this by mistake. I'm doing this by direct payment. I was supposed to show you overpayment. So overpayment, this time now, like I said, you cannot edit anymore the tax rate and account it. Why? Because when you're doing overpayment, the system account of accounts receivable is going to be used in this entry. And let's say, let's go ahead on this, right? I'll save this one now. No, this is a mistake because again, the amount I was using is 85. So what I would do, I created an 85, but I made a mistake. Supposed to be the advance that I should receive is 15,000. So I just go back to that entry, edit this. Okay, I'll click the invoice number and then edit this amount. And then I can quickly edit the amount or the mistake that I have made. So that's actually 15,000 as the advance payment. Done. Now, LiveSync Marketing will now issue an invoice of 85,000 on June 26. So I will issue now an invoice of two. So I will eat fresh. I'm using the same customer name to be very consistent. And then I issue an invoice today. Okay. Whatever is your reference. Then I would say full year marketing support. And the amount of this is this is 85,000. And then this is where I use now the proper tax rate. And then this is branch 2, and then this is also department 2, right? I can attach something I need to attach. But then I approve. And again, this time it would ask me because they're an existing advance. So before doing that, let me just show you first the age receivable here. So you would see the age receivable for it fresh. When you're doing overpayment, the negative will show up, and oh, I have a bigger amount here. So there's something wrong with my invoice. Okay, I'll edit my invoice here because it's not 850. Okay, it's only 85. And then quickly update from here. See? So, yep, you'd see now both the invoice not allocated and then the credit or the advance that's not allocated. So what do we do now is to allocate the advance by going to that invoice, and then we'll put in 15,000. Done. So then let's update. The credit is gone and the invoice is reduced. Okay, so that's all about spend money and receive money using different methods of entry: direct payment, prepayment, and overpayment. And like I said, prepayment and overpayment, you use this. The application of this is when you have advances, and then you will have to allocate the advance later when an invoice or bill is being created or received on a later date, where you can allocate the amounts. Now we go to the final part, which is transfer money. Now, what's the application of transfer money? So if you have multiple bank accounts, let's say you have Rock Bank AED and then Emirates Islamic Bank AED, and then you try to move the money, technically you're just crediting the other bank and then debiting the other bank, right? So here in Xero, there's another way of simply doing this. So let's say I wanted to move 5,000 from my Rock Bank to my another bank, ENBD. I would just simply create as transfer money, because ENBD will be actually another bank type for me. So I would just select the money is coming from Rock Bank, and then I would select ENBD here, and then this is the date and this is the amount, and then I put the reference. Then you will have now an entry reducing another bank, increasing the other bank, because you're doing actually a transfer money transaction. So from the word is a transfer money, you can do a transfer transactions between your bank account. Another application for transfer money would be to replenish a petty cash fund or any cash fund. So in our example would be we would try to replenish. So if you're looking at your petty cash right now, your petty cash is the only amount is left is now 3,000, but you're sticking by 5,000. So 3,000 here, right? So you would want to add additional 3,000 amount in your petty cash. And what do you do here is we issue a check from your Rock Bank, and then your staff would encash this to the bank. This amount will now, 3,000 will be in the hands of the petty cash custodian. So how do you book that? So you do that by using transfer money. And because I'm withdrawing a check, so how much? So the money is coming from Rock Bank, and then the money is going to petty cash, and then I would have a check number of 05 here. This is my 3,000. And this is given this on June 15. So I'm replenishing now 3,000 to the bank, to the petty cash. So you have a 3,000 here. You receive 3,000. If you switch to your bank, you would now have also another entry where you are reducing on the 15 this particular transaction. So you're hitting two bank types at the same time. Let's do another example for that. You can actually do that also from here, either Rock Bank or petty cash. It does not matter. You can also do it from here. What is important is that when you're doing transfer money, you have to be very accurate where the cash is coming from, Rock Bank or petty cash, right? So here again, there would be another replenishment of petty cash. The amount would be check number 009, and then it would be just be 1,000, and I'm doing this say on the 28th. Okay, so again, another second replenishment. The same thing would happen. What is that your Rock Bank now is reduced by 1,000 here, 1,000 here, 1,000, and then if you switch to your petty cash, you have an increase of 3,000. So that is how transfer money would work for us in the banking module. Now, you can scroll here. You would see that this is the ledger's book entry of your petty cash and showing unreconciled, and then the same thing in your Rock Bank. Now, this is just the dashboard report. You can also, if you want to see really the ledgers, then you can go to reports, and then you can go to accounts transaction, this one, which is your ledger report. You can do a separate report, let's say Rock Bank. Then you will see now the ledger of the Rock Bank. That would actually be the same. And then this also with your petty cash would also, you can also run the ledger report through accounts transaction report. So this is also another report. Okay. So that is bank accounts.